Okay. And so the basis of the lawsuit is that, from what I understand, LBRY raised funds by issuing LVC, which were library video credits or library something credits.
Like tokens, different forms of digital currency. But what they are, mediums of exchange and stores of value. And the SEC is deciding to relabel them security contracts.
This would apply to game virtual coins. Yeah, I mean, I guess so that's the extension.
Oh, yes, it has frightening expansion.
Can a company sell a gift card at a discount?
Surely you don't have to register with the Security Exchange Commission to get a loan from your bank, right? Well, of course you don't. That would just be absurd. So what makes an initial coin offering any different from obtaining a bank loan? The bank, although it may sell the loan to a third party, provided it meets any consumer protection and other requirements that apply in that jurisdiction, is providing the loan primarily for the purpose of earning interest and fees. They do not expect an appreciation in the value of the initial loan amount or in the interest and fees, other than changes based on a fluctuation in floating interest rates, for which they could potentially hedge in a separate financial instrument.
Then it's not a contract where you're saying, give me money for my business in exchange for you having a right to participate in profits. When it doesn't have the profit participation right, it doesn't have a contractual component, it shouldn't be a security contract under the law.
If they do sell off a loan or a bundle of loans, most likely at a significant discount, you do not expect that loan to be divisible. Because of this, there's no easily accessible secondary market platforms where unsophisticated parties can speculate on your bank loan.
But I mean, I'm thinking of merchandise now. I mean,
And in terms of trading stock, your success or lack of it will depend on your own entrepreneurial efforts, not the efforts and management of others.
I mean, in theory, taken to an extreme or an absurdity, or rather just say the logical sequence, selling anything to support the business, to the extent that it may appreciate in value, is appreciation of value is one of the criteria?
No, I mean, at least not the way they put out in that complaint.
An ICO, on the other hand, is classified as an investment contract by the SEC because the expected increase in value of the investment constitutes a reasonable expectation of profits, and those profits are largely influenced by the managerial decisions of the coin's issuer, as their reputation, as well as their management of the reserve supply of coins, will influence the price point of your coins. Coins are generally, if not entirely divisible at least to each individual coin.
Okay, but so hold on. So Securities and Exchange Commission comes in, they qualify the token as a security. My question is, how is it even a currency in the sense that how can you withdraw it for actual currency or Bitcoin or digital currency? Like how is the token digital currency if it's only good on the LBRY website?
Per the SEC's complaint against LBRY, it appears that the same coins are sold several times a day and that speculative trading and investment carried out on trading platforms, that is to say secondary markets, far exceeds using the coin as a means of payment on the LBRY platform itself.
And no, obviously no voting, no participation.
Right, and none of that. I mean, this is their interpretation is if you're doing anything to raise money, they even put this in the Ripple case. If you sell something, number one, two, that raises money for you, then three, it's a security contract. Token is not a stock. You don't have any right to profit participation.
No right.
So in my view, right out of the gate, number two, it's not a contract. You don't sign a contract. You don't do it.
It doesn't entitle you.
It's not a security. It's not a security contract. Not governed by the SEC.
Neither Viva Frei nor Robert Barnes had to read the nightmare that is IFRS 9, Financial Instruments, IAS 32, Financial Instruments Presentation, or IFRS 15, Contracts with Customers, or the limited guidance by the International Financial Reporting Standards Board for the holders of convertible cryptocurrencies, or the limited guidance by the Internal Revenue Service to those who trade or invest in crypto and those who receive revenue for goods and services in crypto on convertible cryptocurrency, or research US GAAP, or get into the weeds of security law to know that securities encompass more than just stocks, which often, but not always, confer voting rights onto their holders, as well as the right to share in the residual value of the entity after all of the liabilities have been settled, that is to say, ownership rights.
But that ship has sailed. U.S. Supreme Court basically said anybody who publicly markets a contract for the purposes of profit participation, to raise money for the purposes of profit participation, is a security contract.
Had either of them simply bothered to read one paragraph from 15 U.S.C. 77A, aka the Securities Act of 1933, never mind Release 81207, they might have understood that it is the reasonable expectation of profits from the managerial efforts of another, not profit sharing, that forms part of the definition of a security under the jurisdiction of the SEC.
What they're trying to do is use the ICO examples. Hey, these things were called digital currencies, but they were offering the future promise of tokens in exchange to raise funds, and the future token value was based upon profit participation. It doesn't meet the traditional definition of a security. That doesn't meet the traditional definition of a contract. Definitely doesn't meet the traditional definition of a security contract. And they're saying they can still do it if it involves fundraising. Are you making profit? Are you fundraising? Are you selling something that we can somehow call a security, even though it doesn't seem to meet any traditional definitions or limits? If that's the definition of a security contract, I don't know if that has any functional limits.
There's a difference between getting something wrong, we all do that sometimes, and getting things wrong because you were too lazy to do the most basic research preparation work for something that is a commercial enterprise, I might add, and then relying on
authority.
And
reptile brain, folks. Because it works.
And now let's follow through on the hypotheticals. Obviously, this would have the same impact on tokens on locals.
Yeah, that's why Odyssey is at risk.
Well, if locals are accepting tokens, I sincerely hope that they are complying with the FinCEN's guidance on anti-money laundering and the bank secrecy requirements applicable to money remitters. But if they are listening to lawyers like Barnes, why would they?
It's not a contract. You don't sign a contract.
After all, right? Who cares that there is mutual assent and consideration?